I think gold goes higher than anyone ever thinks possible. I think it never comes back down because it is pegged to a new system. How high that is, I have no idea, but I would tell you much higher than people think possible. Over the last 25 years, since 2000, gold has doubled the value of the 10-year treasury, the performance, with no counterparty liabilities. So when you see all of these governments buying gold, but equally as indicting is repatriating it, and realize this common settlement currency for all of these transactions in the new BRICS union, where, by the way, at the end of the Novigrad meeting just 2 weeks ago, 59 countries said we're joining.
Gold prices have seen a significant spike over the past 12 months, reaching all-time highs. This can be attributed to a combination of economic, geopolitical, and market factors. Typically, gold prices surge in times of economic uncertainty and geopolitical tensions as investors flock to the yellow metal as a safe haven asset. Indeed, gold has actually outperformed the S&P 500 over the past 6 months, even as stock markets have set successive all-time highs amid their recent bull run, with the yellow metal gaining 20% while the S&P rose 18%. Furthermore, the ballooning of federal debt is occurring alongside global action to decrease international reliance on the greenback. As the BRICS alliance continues to embrace those efforts, things will only become more worrisome for the US dollar. Andy Schectman of Miles Franklin Company argues that if global players revalue gold, the West's gold prices will no longer hold, leading to significant price increases. He mentions that gold is valued on almost every central bank's balance sheet, especially in European central banks, at $35 an ounce, which is still the Bretton Woods number. Going forward, in addition to the Fed inflation and geopolitical events, experts will be looking for cues from factors like supply and demand. In terms of supply, the world's 5 top gold producers are China, Australia, Russia, Canada, and the US. On the demand side, China and India are the biggest buyers of physical gold and are in a perpetual fight for the title of the world's largest gold consumer. The World Gold Council has reported that central bank gold purchases in 2023 came to 1,037 metric tons, marking the second year in a row above 1,000. Schectman believes that gold, as the only other Tier 1 reserve asset, will rise significantly. He added that central banks are not only buying and repatriating gold, but also removing counterparty risk and potentially pegging it to a new system free from sanctions and confiscations. Gold could reach levels much higher than currently anticipated and might never come back down as it becomes integral to a new financial system. Let's delve into the video to gain further insights. Before we explore, be sure to subscribe and click the bell to stay tuned for more engaging content.
A balance sheet means assets balanced with liabilities, right? That's what it's supposed to mean. It's supposed to balance out. Gold, ironically enough, in all of the central banks is held in an account called the gold revaluation account. You have gold as an asset on this side and the revaluation account on the liability side matching it. So the rules of the central banks is that they cannot offset a liability with their gold holdings. And so they balance it out. You got the asset and the liability. It's the same amount of gold. It's in the revaluation account. Gold is valued on almost every central, first of all, every central bank holds it in the revaluation account, and all of the European central banks, gold is valued at $35 an ounce. It's still the Bretton Woods numbers. So the head of the Dutch central bank said, I know our balance sheet is turning negative, but we have 20 billion at today's prices in gold on the revaluation account, and even though we can't use it, it's nice to know it's there. My feeling is this: all of these countries, what did the BIS say? Gold's the only other Tier 1 asset. All of these countries are buying gold. Who's behind Project Enbridge? Also the BIS. When all of the countries in 2017 started repatriating their gold, starting with the Bundesbank and Austria, Hungary, Turkey, Poland, Czech, Dutch, then the next year, 2018, they bought more gold as a group than they did in the 60 years previously combined, doubled that in 2019, and then mysteriously and ironically, the BIS said, oh, by the way, gold's now Tier 1. You don't think they knew? So what are we seeing now? All of the banks buying up all of the gold, repatriating their gold, and the BIS is involved in Enbridge. What did the Dutch National Bank guys say? Oh yeah, we have gold in the revaluation account. I know it's there, so I don't worry about my balance sheet. All of these countries who have been accumulating gold are also accumulating massive amounts of debt. So is it possible that we see all of the central banks involved in this revalue gold to a much higher level? For people who think that doesn't happen, it happened in 1933 when Roosevelt confiscated gold and devalued the dollar by 40%. It means gold went up by 40%. But what if they put gold at a level 10,000? James Rickards is here telling people 27,000. Now your balance sheet goes from putrid to pristine, just like that. Now they pass a rule that they can offset each other now, and it's revalued to a much, much higher level. If you don't think that's possible, look what's happening in China right now. Silver right now is over $4 an ounce higher on Shanghai than it is in LBMA and COMEX. Slowly, 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 slowly jacking up the price and arbitraging everything that's over. The price is what people are willing to pay. So if the West says gold's 2,000, but all of those countries say no, it's 12,000. Thank you very much. It's all going to flow that way, where they can arbitrage in the gold revaluation account. So what does it mean for gold? It's the only other tier 1 reserve asset in the world, and the most powerful players who know the playbook are not only buying it, but repatriating it, removing counterparty risk, the whole issue with the treasuries, pegging it to a new system that doesn't allow for sanctioning, confiscation, and doesn't have one unipolar currency that we all have to be beholden to. I think gold goes higher than anyone ever thinks possible. I think it never comes back down because it is pegged to a new system. How high that is, I have no idea, but I would tell you much higher than people think possible. Be my truthful answer.
Project Enbridge continues its development and has reached the minimum viable product stage while broadening its international reach. The project aims to explore a multi-central bank digital currency platform shared among participating central banks and commercial banks, built on distributed ledger technology to enable instant cross-border payments and settlement. Schectman believes that countries accumulating gold can now create their own units of currency. He explains that Project Enbridge allows these countries to maintain their monetary autonomy and authority, enabling them to build their economies without relying on the US dollar. The gradual erosion of the dollar's transactional and reserve status, driven by its weaponization and the imposition of sanctions, has, according to Schectman, pushed countries toward a gold-backed system. Now, let's delve into the video.
The BIS reclassified gold as tier 1. All of these countries are buying the heck out of gold and repatriating it, bringing it home. Project Enbridge allows for the trading cross-border payments not using US dollars. It's not compatible with it. Saudi Arabia just became a full participant in Project Enbridge. The largest oil producer in the world just became a full participant in Project Enbridge, turned down a meeting to go to the G7, went to the BRICS meeting, and did not re-up the exclusive deal for only selling oil in dollars. And when you realize that all of these countries who are accumulating gold can create their own unit, one of the things that's interesting to note is that everyone talked about, well, how are these countries ever going to agree on a common currency? They don't have to anymore, because what Project Enbridge will allow these countries to do is maintain their own monetary autonomy, their own monetary authority to build their economies from within, not being reliant upon a third-party currency like the US dollar. The gold will be held in their own borders, and if they want their currency to be accepted as part of the BRICS and part of the unit ecosystem, they have to be prudent in the way that they run their own monetary affairs. So the bottom line is they all maintain their own monetary autonomy, will be able to trade with one another outside of SWIFT over Enbridge, but settle in this unit token. This unit token will be 40% gold, 60% local currencies, and will be redeemable in gold upon demand. And so when you talk about what does it really mean, it is the beginning of the end of the dollar hegemony, or of the dollar supremacy, because I would argue what we've seen over the last several months, Charlotte, that the hegemony of the dollar is gone, because it's not the only sole settlement currency anymore. We're seeing all sorts of deals being struck in local currencies, as we talked about last time, where China is buying corn and soybeans from Brazil and paying for it in digital yuan, which is then immediately convertible on the Shanghai Gold Exchange into gold. The combined volume of the Shanghai Gold Exchange and the Shanghai Futures Exchange over the last 85, 90 days is up over 200% and has now surpassed the COMEX market in terms of volume of transactions. It's the second most important metals exchange on the planet. So what we see, this little by little by little that I always talk about, logarithmic decay, little by little by little by little by little by little by little, we are chipping away not only at the transactional value of the dollar, as all of these deals used to be in dollars, now they're not, but the settlement status or the reserve status, which has always been U.S. Treasuries, well, we've screwed that one up too, because we've weaponized it. And if I don't like what you're doing, Charlotte, you can't use the dollars, but you can, and you can, and you can. And it doesn't matter what we do because we make the rules. That's grown thin, and I think it's a problem. And so by weaponizing the dollar, by doing all of these things, we have pushed this union together, where now gold, if you look, not only has it outpaced it over the last 50 years, just now it's outpaced its return, but over the last 25 years, since 2000, gold has doubled the value of the 10-year treasury, the performance, with no counterparty liabilities. So when you see all of these governments buying gold, but equally as indicting is repatriating it, and realize this common settlement currency for all of these transactions in the new BRICS union, where, by the way, at the end of the Novograd meeting just 2 weeks ago, 59 countries said we're joining on top of the 10. You're talking the majority of human population. This common settlement currency will disincentivize the need to own and procure treasuries when you can buy gold, which not only has outperformed the treasury market both over the last 25 and 50 years, doubled it over the last 25, but has no counter liability. And the unit says you can keep the gold within your own jurisdiction. It will be independently audited, better not mess that up, but they don't even have to send their gold. So they don't need to trust one another in the respect it's a cooperative endeavor. And in order for a cooperative endeavor to work, you must perform and behave accordingly. And our Western media, Charlotte, they don't do a bad job of telling us what's happening. They do no job. And so most of the people that we love and care about here in North America have no idea what's coming.
The 21st century has so far been heavily marked by episodes of economic and socio-political upheaval. Uncertainty has pushed the precious metal to record highs as market participants seek its perceived security. And each time the gold price rises, there are calls for even higher record-breaking levels. According to the World Gold Council, gold's ability to decouple from the stock market during periods of stress makes it unique amongst most hedges in the marketplace. It is often during these times that gold outperforms the stock market. For that reason, it is often used as a portfolio diversifier to hedge against uncertainty. What's next for the gold price is never an easy call to make. Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.